The Nikkei has reached a 30-year high. Should you invest in Japanese stocks or should you get out of them because they're so high? We're going to dive into this article a little bit, the data set a little bit here. But folks, anytime I hear somebody say the market's at a record high, I'm going to backtrack a little bit. I'm going to take my gains, or I'm going to do something. That's just silly. The market will always be at a record high at some point. So if you go like this, all right, so the market, as you can see, it goes up, it goes down, it goes up, it goes down. So record high, record high, record high, record high, record high, record high, record high. See all these dashes? Those are all record highs. So I'm not going to invest here because it's at a record high. I'm not going to invest here because it's at a record high. I'm not going to invest here because it's at a record high. Don't forget, those aren't only record highs. These are record highs too. Let me see if I can't do this right. So basically, yes, this is a record high, and it falls, we'll just say, and then this is a record high too. You see what I'm saying? So it's not just here, it's also here. I'm not going to invest at a record high, right? They just missed this record high. I'm not going to invest here because at a record high. You see how that works? It's stupid, man. It's the market goes up and to the left. It's northeast trajectory is the stock market. It goes up and up and up towards the left. I'm not sure why you say it's northeast. It could be but it goes up. We know that, and it goes that way to the left, just because that's the way the graph is shown. But we're always at record highs. We're always going to hit record highs. The idea that I'm not going to invest now because at a record high is just stupid. So let's look at this one chart here, this one thing. Japanese shares opened higher on Monday with the benchmark Nikkei 225 show slightly above the 28.6 level as gains for materials and energy stocks offset losses for financials. Persistent concerns over the coronavirus reaction, not the pandemic, the reaction, with the overall death toll in Japan topping 5,000 during the weekend, offset much of the enthusiasm over more economic stimulus in the U.S. So anyway, let's look at the decay. All right, so here it is, and we're going to go back 50 years, shall we? Oops. And here's 1990. Look at that. And here we are now. And I'm not sure if this is price to price. I don't know if this is dividends included. We can look at S&P 500 see, but either way, I'm not sure. But anyway, from a price to price perspective, right here, the Nikkei was at 37,000? Yeah, 37,188. And right here is at 28. So it's still a third below from a point to point perspective as it was in 1990. All right, so if you were retired then, you are doomed, my friends. You are in a world of hurt right there. You have you're still you ran out of money. There's no other way around that. And so here, so that's the record high. Okay, so it's still well below the record high. Now, you could invest it here, right? Which you didn't, but you could have. When the Nikkei was at 7,500, you were down 80%. You say, okay, record high. I'm getting out. Well, it's not really record high, but I'm getting out because it's too far. It's just, there's no rhyme or reason or any of this stuff. It just does not. So look, from a point-to-point perspective, the Nikkei is still down 20% off its high from 30 years ago. That's crazy when you think about it. But then look, from here in 2009 is at 7,100, so we're up 400%. That's quadrupling from 2009. That's pretty significant. Let's look at the S&P 500. Oh, actually, while I got Japan up, let's look at some of the stats on Japan. That's the Nikkei. I want to go to Japan, and let's see. I want to go to right here. Let's go to the 10-year. Yeah, look. So the 10-year Treasury right now it's at 3 basis points. So it came off the bottom. So it was at the bottom right here. Is that negative? What's that? Negative? Is that 0? All right, so yeah, so it's gone up by is that 3 literally it's at 3 basis points. We are looking at that's crazy. Look at that. This isn't just this chart. That's 10 basis points. That's 7.5. That's 5. That's 0. Or that's 2.5. That's 0. That's just oh my goodness, that's nuts. Actually, let's just look at it all to show you how. Yeah, right here. So here, that's a better chart. So here you see back in the 1990s, that 7% was a 10-year Treasury. it's gone down here. That's just an inflated bond. If they show the reverse, the inverse, I should say, of the price of the bonds relative to the yields. So right here, it's at 4, right just a couple weeks ago is negative. So it's gone from negative to 3 basis points. So it's up 400% the Japanese bonds in terms of yields from -1 to 3 basis points. You could look at it like that. And here you can see the day right there. All right, so that's the Japanese. Let's look at the Japanese 30-year bonds. Yeah, still right now at a -5 is what the yield right there, excuse me, is 65 basis points. The 2-year bonds are -14. Negative until you get to the 10. It's crazy, man. All right, that's nuts. All right, so if we again look at the, we got to go to the money, government debt, GDP to debt, yeah, debt to GDP, and 236. So it came off its high in 2018 of 238. This looks like it's just 2019 though. So 236 at the end of 2019. Now it's gonna be freaking a million times higher than that. That's just straight up ugly, dude. Ugly. All right, so there's just no inflation. There's no unemployment. There's no growth whatsoever. All right, let's look at the U.S., shall we? I just got to type in U.S. right there. Let's see if we just type in U.S. If that works. Nope. All right, so let's go back. And we're going to go to trading economics. We're going to go to here. And we're going to go to here, markets, right there, United States. We'll go there. Let's go to S&P 500 and see what this looks like over 30 years. Right there, we'll go to 50. Let's go to 25. So again, record high at the end of 2000, or the beginning of 2000, record high at the end of 2007, record high, right there. All these are record highs. And ever since then, record high, 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 record. See, you just can't invest like that, man. It's stupid. What was I gonna say? Oh, but if we go here, all to all, it's gonna look. I wish we could do this logarithmic. Does it let me do that? Let's see. I'm not sure what all that is. So if we can do, I guess it doesn't let me do logarithmic. What's that? I'm not sure what that is. That's S&P. That's percent number. That's a number. All right. Well, anyway, that's it's interesting. So what you can see is that let's just go back. Record high. Yeah, you get what I'm saying here. So the idea you shouldn't invest because the market's at record high. It's just silly, man. Don't invest like that. Dollar outlook remains bearish. U.S. stocks, U.S. crude inventories jump for first time. All that's short-term stuff. U.S. factory activity grows at record pace. I was talking to a guy today who works for Georgia Pacific, and they're saying part of their company is booming. So U.S. private sector activity rises sharply. Is that true? Let's take a look. PMI. Yeah, all right. Dateline 2021. All right, well, it's 55. I'll take that. There we go. So there's some positive news. You got dollar remains, well, that's not positive. Crude inventories jump, home sales rebound, private sector activity rises sharply, U.S. service sector accelerates to 2-month high. That doesn't mean anything. U.S. factory activity grows at record pace in January. Factory activity in Philadelphia beats forecasts, but record pace, again, because we had such a decline from April. U.S. housing starts highest 14 years. Yeah, I guess kind of like I was reading from Milton Friedman or Henry House's book, Economics 101. The pent up demand thing. There is some sense of that, but they smoked us so badly that it's just people coming back trying to get back to even Steven. Doesn't mean we're growing. It just means we're growing from a bad place to begin with. Anyway, don't invest like that. That doesn't make sense. All right. I hope you like to hear your thoughts. We'll see you.